Well, good evening and welcome to another edition of Capital Market Live on Channels Television, where the market speaks and we analyze. Yeah, for all of us that are here working and at home watching right now, you're not at an OM fantastic. Let's see how the markets have performed so far and see how we can make profit in the month of August. But first, let's kick off now with what's played out with global indexes that we track. We see Pan-European stock 600 was up by 0.74%. That was about 8 a.m. in London. As most regional sectors there, that's trading in the Eurozone there. They traded in the green. The DAX about 7 basis points higher to close for the FTSE 100. That was 0.27% lower. The CAC 40 in France on Friday did manage to close 0.28% higher. Basic resources led gains there. About 1.27%, with technology stocks up 1.17%. On the flip side, travel, leisure names, and media companies were both down almost 1% in early deal making. All major bosses edge higher there, as we can see. Then for the Asia markets, it was looking much better on Friday for the Nikkei, 4.03%. To close on Friday. Shanghai Composite 0.72% higher. We see the Hang Seng Index is up 0.10%. You know, tracking Wall Street's sharp rebound. That's talking about markets over in Asia Pacific there. So a good picture there. Flip over to U.S. markets, also in the green. Dow Jones Industrial Average closed 0.53% higher. The tech-heavy Nasdaq was 0.60% higher on Friday. So it was mostly green shoots for the last trading day of July for the major indexes that we track. And now if we flip over to commodities, you know, we've been tracking commodities a lot these days because with what's happening, you know, with the Strait of Hormuz, U.S.-Iran war, that impacts these commodities. And we see the ones shining for the month of July. This is for the whole trading month of July. We see Brent crude. That was up 20.58%, double-digit gains for this trading month. WTI, 23.46% higher for the trading month. That's looking at commodities now. Gold edged up 0.61%. You can still see there's pressures, but gold was able to defend that $4,000 level in this month of July. For silver, that was a laggard there, 4.17% down. That's for the metals that we track right here. And definitely that's showing there was a lot of pressure on silver. You know, regardless, gold was able to just eke out that 0.61% gain for the month of July. But as usual, we see oil shining again, 20.58%. So that means if you were long oil for most of the month of July, you're definitely in profit there. We'll see if August, you know, what August has in stock for these commodities, we'll definitely be tracking, but it seems we might still have the same issues that we did see in July. It might still remain with us, you know, in August, but hopefully we see de-escalation and maybe we don't see a monthly gain for oil. That's for August. All right, let's flip over now to Nigeria. We'll see Nigeria's stock market ended the trading week in the red. That's the last trading week of July ended in the red, but the whole trading month was in the green. That's talking about the NGX there. Investors are watching, you know, half-year earnings. Most of these big companies have released their half-year earnings, and definitely that did drive sentiment. So we see 0.84% lower for the all-share index, even though for the whole trading month of July, it's up about 6.90%. So it's a monthly gain for the NGX, even though the last trading week of July did end, you know, in the red. Let's flip over now and see what happened for the last trading week of July. Let's look at the performance there. Trading activity, that's for the stock markets. All right, so we see there 0.84% lower. Equity cap 158 trillion. That's for the last trading day of July. Let's flip over now. We see volume 5.11 billion traded for the week, valued at 404.78 billion naira. I think it was about 500 billion for the previous week. Deals 285,000 for the whole trading week. Let's flip over now to other parts. We see for the indexes that we track. So I guess this is why we're seeing a pullback for the trading week Consumer goods, we did see sell-offs there, 2.29% lower for the trading week. Banking, financial services, 0.69% lower. Industrial goods, 0.20%. But the lone gainer for the trading week, that was insurance, 1.72%. We did notice that, rally with insurance. That started off at the beginning of July. I believe the insurance counter added, a good about 11% for the whole trading month so far, but 1.72 for the last trading week of July. Not looking bad at all, and we've come to that deadline, the recapitalization deadline for most of these insurance companies there. That happened on the 31st of July. So I guess now we'll try and see what happens, going forward. Is it going to be profit-taking? We'll see. Critical Minerals PLC led the top gainers for the trading week, 22.78% higher. Coronation Infrastructure Fund, that was at 127 naira to open, closed at 154 naira, 20.92% for the whole trading week. Thomas Wyatt PLC, that gained 20.66%, closing at 4 naira 38 kobo. Let's flip over to other parts now. We see for the top laggards for the week, ABC, that declined 18.44%. Fortis Global Insurance PLC, 16.13% lower, and Triple G and Company PLC. Not seen that one for a while now, but it did record a 15.54% drop. Then for the top trades, First Holdco. First Holdco was in the news a lot in July. Definitely hearing, the chairman there, Mr. Femi Otedola, did add, to his stash there, bought more shares. That was, reported, most of the week. Then it did climb, to new highs. That's the share price of First Holdco. Now we see Ava Capital PLC. That was also the top trades for the week. Access Holdings PLC also recording top gains there. That's for the whole trading week. So, that was basically the picture right there, for this trading week. But what would August, what would that have in store for most of the investors? We're definitely going to, circle back on that, find out, what's driven sentiment so far. But we'll take a quick break now. When we come back, we'll unpack everything that played out in July and what to expect in August. That's in a moment. Just stay with us. All right, joining me now to unpack the trading month is Isaac Osaro, is the head research team at First Securities Brokers Limited. He's joining me right here in the studio. Thank you so much for joining me.
Thank you.
I'm pretty sure you'd have been at 101 Bear, at this point. but you chose to be here, to help guide our investors, and find out what to expect, in the month of August. But let's first of all, find out everything that played out in July. We did get the earnings. It's earnings season. It's been raining earnings, and they've been looking quite good. But let's kick off now with MTN Nigeria. Key highlights: revenue 25.9% up year-on-year, 2.99 trillion. Revenue alone. Operating profit 1.27 trillion. So we're seeing trillion. Profit before tax 1.09 trillion, up 75%. Profit after tax 707.5 billion. We did see how much they made from data alone, and data revenue surpassed voice at this point. Nigerians spent a lot on data in the first half, according to MTN's earnings there. How do you see this one?
The world is changing. Pre-COVID, post-COVID, we are moving into a data-centric, driven economy where almost everything is more of data. And when you see the number, I think data now contributes over 60% of revenue for MTN. And they are aware of that the world is moving to that side. So for them to see such a number, which I think data revenue is around 1.9 trillion naira, which is huge. And I think it is expected, not just even for MTN, I think other telcos, not just in Nigeria, even Africa, I believe, should share similar sentiment. And also, we now have more content creators in the economy, which is also driving data. And even in the office, where we have meetings, it's more of Teams. Sometimes we join CBN with YouTube. All of these have been data-driven. So it's expected for MTN to report such a huge revenue.
Yeah, we're consuming a whole lot of data. See people on the street, watching, some of those skits at that point, all of that transferring into the purse of a company, like this, and other, telecom or operators at this time. So, going into the second half, what should investors look out for, at this point? And I'm pretty sure there's been some kind of sell the news, at this point with the share price. Actually, yeah. I think it dropped, most of the week.
Yeah.
What should investors do with this?
The number is pretty good. Let's look at where MTN has been coming from in the last 2 years. They suffered FX problem. There was inflation. And as at H1 2026, they recorded zero FX borrowings. That tells you, okay, now we are no longer looking toward the shock of FX problem again. And because last 2 years, we reported over close to a trillion naira FS loss. I think 960 billion naira FS loss. And now, with this good number, I think full year results should be great. Probably the performance might have been priced in because people were expected to see a +10. They declared 16 naira dividend. I believe that's almost 30% payout ratio of EPS. EPS is around 33 naira. Dividend 16 naira, interim dividend 16 naira. So I believe full year results should be great. And if I should analyze this number, so we are getting close to maybe a 2 trillion PAT. And they should pay out close to, let's say, 50% of that money. That's like 1 trillion naira dividend payment, which I believe, investors always love dividend.
Oh, yeah.
And so when you see such a number, I believe this number should signal the right direction for MTN. No FX loss, data will always be there. Although the growth in Q2, the revenue growth in Q2 was slower because last year there was hike in data, and that bloated the number of last year, and now it's not normalizing over time. So there's no cause for alarm with the numbers.
Right, no cause for alarm. All right, let's flip over now to consumer goods giant there. BUA Foods reported a 60% decline in revenue, but still delivered a 12% increase in profit after tax. So we see there for BUA Foods H1 operating profit that was up about 13%. Profit before tax up 14% at 314 billion. Profit after tax 292, up about 12%. So BUA Foods, when it comes to consumer goods, we know that's a different kettle of fish at this point. They depend highly on disposable income of the people because
Correct.
The consumer drives this one. So what are you seeing here?
Well, the first thing I noticed when I saw the revenue, there was a dip in the revenue. I also saw the cost of sales, there was a dip. And I had to look what could have really driven such a number. And then I saw the bottom line, it was looking great. That tells you BUA is one of the leaders in that sector. And what could have driven the low revenue, first of all, when we look at consumer demands, probably low. But beyond just the demand of consumers, what I looked at was the economy in general. In the first quarter, we had never appreciated by 3%. Investors used the opportunity to front load most of the sugar they needed, the flour they needed, because even though there's some stability in the FX markets, they tend to front load. So probably they are using more of what was already bought in Q1. That's why we see lower production in Q2. But going forward, I think this should be should look great. But nevertheless, BUA is like one of the leader in the sector. We've seen the gross margin of 47.5%, higher than this, despite lower revenue. That tells you that despite the lower volume, they still get to expand their numbers, and they have better efficiency, which we can look at from operating profit at 42% as against 31%. That tells you they have better efficiency with their numbers.
Yeah, we did hear management say the revenue decline was driven by moderating pricing across key product categories. Do you see this as a deliberate strategy, to protect the market share, in a challenging time?
Well, I'm not part of the management to say if that is a deliberate strategy, but we need to look at moderating inflation. Even though it has been at 15% for a period of time, it has over time stabilized, and that should continue in the next 6 months. So do I think it's more of a strategy to stabilize margin? Well, I wouldn't say. They know what is best for the business, but the economy generally, I think that for me is a good one for them.
Right, and what do you think investors should be looking at this point? Going into the second half of 2026, we're going to be expecting the earnings, for that. What direction is this giving you, seeing what's played out in H1?
For H1, I think most of the decline was more in Q2, not in Q1. And in the next 6 months, we think there will be a lot of activities coming up, a lot of election also is coming up very soon. So we tend to see more of consumer spending. Media will also be there, hospitality will be there. So we actually would like to see more demand, and this should probably drive numbers for BUA Food in the next 6 months, or 5 months rather.
Okay, so looking at the earnings, for MTN Nigeria, looking at BUA Foods at this point, is that telling us Nigerians are choosing data over food?
We can't really say that choosing data over food, but right. The people surely have priority. And I think there are two things we can't really do without. Every day I need data to check what is happening on the internet. Even to work when I work from home, I need data to check. I also need to eat. All right, so there are different sectors.
So as you're using the data,
I'm also eating.
You're also eating.
So it's not, you can't do one without the other. So it will continue. And also, let's not forget, MTN just and NGS, MTN just Airtel are the only people we have. Although there are some other company in there, but MTN is more of the leader. But in the consumer sector, it's more a bit competitive.
Yeah, so there's a lot of competition there.
So we have to look at other players in the market. There is Dangote Sugar also produces sugar. There's the flour mills also do more flour. So there's a bit of competition in that place. That's why we did like people are not preferring one to the other. You can't separate them. We need them together. As I'm working, I also need to eat my food.
Yeah,
so that's just it.
Yeah, you have to eat. At this point, even though some will say, what, I need to pay my data. At this point, but I don't have food.
To eat.
But at the same time, you just find a way to...
Yeah, you just have to make it happen. Bring them together and all.
All right, so definitely these earnings, they keep rolling in. We're still expecting more.
A lot.
A lot more, going into the month of August. What we've seen so far, what is it telling us about, the Nigerian economy for H1?
When we look at the Nigerian economy, when we roll back to January to June, it was a decent performance generally. I think the only downside we had was not within our control, which was the external factor, which is what happened in the Middle East, because inflation was moderating right from January to February before the uptick in March, April, and May. Then there was a ceasefire agreement that happened in June, and we saw the dip in fuel price before we saw some few rounds of rockets. But thank God now it's better. But generally, GDP was great, over 3.8%, higher than what we did in Q1 last year, which was 3.13%. GDP was good. FX never appreciated. Our reserves, $52 billion, which is huge. So everything tells us on the macro level is looking great in the economy. NGS did over close to 50% in just the first half of the year. Yield in the market looking great, 21%, 18%, 19%, which is attractive enough to bring in foreign investors and to make sure domestic investors hold on to their asset. So I think generally in Q and full year, half year, it was a great number for not just the economy, but also for businesses in Nigeria.
Right. So, businesses doing great, macro, not looking bad at all. You see our external buffer there looking, strong. It's been grinding higher so far. But I'm sure the man on the street will be wondering, how does all of this trickle into my pocket? There's still that affordability problem. We still see at the micro level, there's still a lot of struggle, there for households. How do we marry this?
So it takes maybe on average, if we were to follow the proper economy, it takes on average 5 years for most of policies to transform. So is the transmission mechanism. It takes time. It doesn't just happen overnight. It doesn't happen in 9 months or 1 year. It takes time for most of these policies at the macro level to flow down into the micro level. So it takes time. So even me personally, I can understand the fears. When you tell somebody, as an analyst, you explain inflation is moderating, reserves are going up. They don't really care. They'll tell you, I bought a bag of rice. That is what they are more of concern.
I paid so much just to transport myself from here to here.
Yeah, so they are more concerned about
100%.
What really happens to me. I don't know what, they don't even know what is FS reserves. When you tell them, I don't know what is that. When you tell them this is happening, they say they don't even know what is happening to them is what am I seeing on a day-to-day basis. But this thing takes time. If we continue in the right trajectory, with time, we tend to see most of these things translating.
I'm sure when you tell them about FX reserves, they'll be like, what about my personal reserves? What's happening to my reserves? At this point. All right, let's move over to the insurance stocks. For the trading week, we did see insurance. That did, go up. It was a lone gainer for this last trading week of July. But if we look at the insurance index, for the whole month, it's up by 11%, so far. So we did see a lot of investor appetite, for these stocks. I guess it's on the back of the recapitalization deadline, 31st, but that's over now.
So when I saw the news, I think from NICOM, I think over 60 or 70% they've gathered enough in their capital raising, which is for me is positive. What does it do for the insurance sector? Now they are getting the momentum. Now they are getting the visibility they need, and the new policy with the insurance sector is now expanding more. You now have more funds to make sure you take on more risk. Because most times, the average person doesn't even know what risk is. I don't even care for me to insure my risk. But now there's enough policy to make sure you cover a lot in the economy, and this will give them enough revenue when it comes to their numbers. And also beyond just the risk, also they have enough funds to probably face in the investment income, which also adds to their earnings. So all of this great momentum is what led to the drive or rally in the insurance sector for the month of July.
Right. And I'm wondering if does this continue, in August, or are we seeing a pause, at this point? Because it almost seems like a sell the news event. The recap deadline is here. So what happens going forward?
So we await the final numbers. Let's see what NICOM is saying that, are they merging? Who are the people? From the good news, over 70%, they've done their calculation properly. And that is, for me, is good. But over time, the numbers will tell. Now we've sold the news to you now, so let's see what your earnings are. Are you making money with the money you've raised? What is the value for shareholders and all? But I think they will surely do pretty well over time. It might not be a smooth jump ride and all, but gradually, if your numbers are backing your earnings and your share price, I think investors will say, okay, I love what you're doing, and I think we'll ride with you.
All right, and I know you guys at First Securities, you've done your homework, you've brought out your crystal balls, you've tried to determine what will happen in the second half of 2026. What should investors know?
First thing you need the investors to know when it comes to pre-election activities. Most people are always concerned about pre-election. They're like, election is coming, we don't know. We did our analysis. First of all, let's come to the NGS market. Since we moved from the military era to the democratic era, we had like 6 pre-election years from 20, I didn't include 1998, but from 2022 down, we've had 6 pre-election years. And out of those 6 pre-election years, we had 4 that were in gains, and just 2 we had losses, which was in 2014 and 2018. And when we look deeper on what led to that loss in 2014 and 2018, we understood that then we had a macro problem. There was a macro problem. FX was depreciating, inflation was rising. There were also tensions when it comes to election. Right? That's basically in 2014 and 2018, we had, I think, our GDP. Went to negative and all. So all of this led to the decline in 2018. But when we look at the problem we had then, do we have same problem now? From the numbers are telling us, no, we don't. GDP is growing, Naira is appreciating, or to a greater extent stable. Inflation is moderating. I also look at the inflation numbers also. The only time we had inflation rising was in 2022, and that was outside our factor. That was the Russian-Ukraine war that happened that led to higher crude oil price in the economy. There was higher inflation because Ukraine is just one of the top producers of sunflower oil and all. So all of this led to higher inflation globally, not just in Nigeria. So that's just outside our control. But we'll go back to 2014. That was before the election in 2015. We'll go back to 2014, 2018. the numbers of inflation moderated, or at least they were stable. And we're expecting that momentum to continue in 2026. Inflation is meant to moderate over time, or at least be stable. We might not get the single digits, but we might at least remain at this level of 15.8%, maybe 16%, 15%, but at least we're sure 15% before the end of the year. You remember early this year when I came here, we mentioned FX. We might likely see FX get to 130, and we see FX at 130.80. So we don't think FX will probably depreciate faster because election is coming. No, we don't think so. But FX, we have enough reserves now to make sure we enter the market to intervene, which is what CBN has been doing so far. And FX will likely moderate. But will there be some movement in the FX market? Yes. Maybe we might get to 1.4 maybe. But I think at the 1.4, Naira is still stable. When we look at what it is coming from January at 1.432, now should stable over time. And there will be concerns of, oh, the election is coming, there will be this, there will be that. But we don't think of any major
election
shock.
spending, right?
Yeah, so we don't think of any major shock that will happen in the economy.
And definitely we did hear, from billionaires at some point. I think the likes of Dangote did predict we'll be at 1,000 Naira to the dollar. I think at the end of this year. We're still waiting, for that, to happen. But a lot to unpack, and definitely the trading month of August. We'll see what plays out. But are you seeing positive?
For the month of August, we expect to see the banking results.
Right.
And I think they are probably undergoing auditing process now. GT, the likes of Fugas, and not just Fugas, the most 22 banks will likely release their audited results, and will likely see integrity dividend. Like I always say, our investors love dividend, and that should drive the momentum in the market. We're looking up to the banking guys to give us a decent result. So we might not see a huge growth in the market, but they've raised their capital. They now have enough to enter the market to give more loans, to probably invest in investment income and all. So we should see a great number in the month of August.
We're definitely looking forward. Thank you so much. Isaac Osaro, Head Research Team, Trust Securities Brokers Limited. Thank you for coming on today.
Thank you very much for having me.
All right, and that's our show today. Definitely it's been quite an interesting trading month of July, and we hope it gets even better in August. And remember, the deal is to buy low and sell high. Thanks for watching Capital Market. I'm Ladi Williams. Bye for now.